Hello, and welcome to the Tech Guild channel. The world of cryptocurrency is constantly evolving, and staying up to date with the latest developments is essential for anyone interested in this exciting field. Bitcoin mining has become an incredibly important part of the cryptocurrency world, and the halving event is something that anyone involved in cryptocurrency should know about. As we approach the next halving event, it's important to understand what it means for the future of cryptocurrency and Bitcoin mining. In this video, we'll be taking a closer look at the future of cryptocurrency, with a focus on Bitcoin mining and the halving event. We'll explore what the halving event is, how it impacts the mining process, and what it means for the future of Bitcoin and cryptocurrency. We'll also explore the current state of cryptocurrency mining, and discuss what the future holds for this exciting industry. Join us as we take a deep dive into the world of cryptocurrency and explore the future of Bitcoin mining and the halving event, only on the Tech Guild channel. What is Bitcoin mining? Bitcoin mining is the process of creating new Bitcoins by solving extremely complicated math problems that verify transactions in the currency. Miners use their computers to solve these complex algorithms, and in return, they receive newly minted Bitcoins as a reward. To understand Bitcoin mining, it's important to know that all transactions made on the Bitcoin network are recorded on a public ledger called the blockchain. Miners are responsible for verifying these transactions and adding them to the blockchain. The process involves grouping transactions together into a block, which the miners then race to solve the algorithmic puzzle. The first miner to solve the puzzle and verify the block of transactions receives a reward in the form of newly minted Bitcoins. To start Bitcoin mining, you need mining hardware, such as specialized computers called ASICs, and mining software that connects your hardware to a mining pool. A mining pool is a group of miners who work together to solve the algorithmic puzzles and share the rewards. In the early days of Bitcoin, miners could use their personal computers to mine Bitcoin, but as the difficulty of mining increased, specialized hardware was developed to keep up. Today, the most common type of hardware used for Bitcoin mining is the ASIC, or Application-Specific Integrated Circuit. ASICs are designed specifically for mining cryptocurrencies and offer high hash rates and low power consumption, making them ideal for mining Bitcoin. There are many different ASICs on the market, with varying specifications and prices. Some popular models include the Antminer S19 Pro, the WhatsMiner M30S, and the Bitmain Antminer S9. These devices can cost anywhere from a few hundred to several $1,000s, and their efficiency and profitability depend on factors such as electricity costs, mining difficulty, and Bitcoin's price. Now, let's talk about mining software. Mining software is used to connect mining hardware to the Bitcoin network and manage the mining process. There are many different mining software options available, both free and paid. Some popular options include CG Miner, BFG Miner, and Easy Miner. These programs allow miners to monitor their hardware's performance, adjust mining settings, and receive notifications about the mining process. In addition to traditional mining software, there are also mining pools, which allow miners to combine their computing power and share in the rewards of mining Bitcoin. Some popular mining pools include F2 Pool, Poolin, and Antpool. By joining a mining pool, miners can increase their chances of earning Bitcoin rewards, but they must share those rewards with the other members of the pool. The halving event. The halving event is a pre-programmed feature in the Bitcoin protocol which reduces the block reward miners receive for mining a new block. In simple terms, it reduces the rate at which new Bitcoins are produced. The halving event takes place every 210,000 blocks, or roughly every 4 years. The most recent halving event took place in May 2020, and the next one is expected to take place in 2024. When the Bitcoin protocol was created, the block reward for mining a new block was set at 50 Bitcoins. However, to control inflation and limit the total supply of Bitcoins to 21 million, the block reward is programmed to be reduced by 50% every 210,000 blocks. As a result, the reward is cut in half and becomes 25 Bitcoins after the first halving event. After the second halving event, it is reduced to 12.5 Bitcoins, and so on. So, how does this affect Bitcoin mining? Well, miners play a crucial role in the Bitcoin network as they are responsible for verifying and adding new transactions to the blockchain. In return, they are rewarded with new Bitcoins. However, with the halving event, the block reward is reduced, which means that miners receive fewer Bitcoins for their efforts. This can lead to a decrease in mining profitability and revenue for the miners. As a result of the halving event, some miners may drop out of the network if the cost of mining exceeds the revenue earned from the reduced block reward. This can lead to a decrease in the overall hash rate of the network, which is the computing power used to mine new blocks. According to data, the hash rate, or the computational power used in mining, dropped significantly after the most recent halving event. The hash rate dropped from a peak of 136 exahashes per second in May 2020 to a low of 69 exahashes per second in November 2020, a decrease of nearly 50%. The decrease in the hash rate can be attributed to the reduced rewards, which led to a decline in the number of miners participating in the network. However, the halving event also has a positive impact on the price of Bitcoin. Historically, the price of Bitcoin has increased significantly in the months following the halving event. For example, after the 2016 halving event, the price of Bitcoin increased from around $650 to over $20,000 by the end of 2017. The reduced supply of new Bitcoins can lead to an increase in demand, which drives up the price. However, with a decrease in the hash rate, the network becomes less secure, and the time it takes to mine a new block may increase. This, in turn, can result in slower transaction processing times and potentially higher transaction fees. The current state of Bitcoin. As of February 2023, the current state of Bitcoin is characterized by a high degree of uncertainty. The price of Bitcoin has been fluctuating between $35,000 and $50,000 for the past few months, leading some analysts to suggest that the market may be entering a consolidation phase. This consolidation may be a healthy sign for the long-term stability of the cryptocurrency market, but it also indicates that Bitcoin's market value may remain stagnant for a while. Several factors contribute to the current state of Bitcoin and its market value. For instance, the regulatory environment around cryptocurrencies has become more complex, with several governments implementing laws and regulations to monitor and control their use. Additionally, the increased competition from other cryptocurrencies, such as Ethereum, Cardano, and Solana, has put pressure on Bitcoin's market dominance and led to a decline in its overall market share. Moreover, Bitcoin's adoption and mainstream acceptance as a form of payment remain limited, with many businesses still hesitant to adopt it as a payment option. As such, it may take some time before Bitcoin's market value reaches its full potential. Analyzing the current trends and predicting the future of the cryptocurrency market is a complex task that requires thorough research and understanding of the market. Cryptocurrencies are a relatively new and constantly evolving field, making it important to consider various external factors that may affect the market. The pestle analysis is one technique that can provide insight into the external situation of an organization from various angles. Factors such as political, economic, social, technological, legal, and environmental factors can affect the cryptocurrency market. It is important to note that analyzing the cryptocurrency market requires technical knowledge. Therefore, the analysis should include the current trends and news in the market, such as recent price fluctuations, market capitalization, and trading volumes. The analysis should also include discussions on the current and potential uses of cryptocurrencies, the impact of regulations on the market, and technological advancements that may affect the market. To predict the future of the cryptocurrency market, the analysis should consider the current and potential developments in the industry. The analysis should also consider factors such as market demand, market supply, and the potential for competition from other currencies or payment methods. It is also important to keep in mind that cryptocurrencies are a highly volatile market, and predictions may not always be accurate. Expert opinions and thoughts. Cryptocurrency is a decentralized digital currency that is secured by cryptography and operates independently of a central bank. Bitcoin, the first and most well-known cryptocurrency, has seen significant growth and has been adopted by many as a store of value and a means of payment. According to an article on Britannica, the idea behind Bitcoin was to create a peer-to-peer electronic cash system that would allow online payments to be sent directly from one party to another without going through a financial institution. However, the future of Bitcoin and the cryptocurrency market is subject to debate among experts. Many experts believe that Bitcoin has the potential to become a mainstream currency in the future. Some predict that Bitcoin's price could reach up to $100,000 or even $1 million in the coming years. However, others warn that the high volatility and lack of regulation in the cryptocurrency market could lead to significant risks for investors. Several experts state that Bitcoin and other cryptocurrencies are here to stay, but they will not replace fiat currencies anytime soon. It is also mentioned that the technology behind cryptocurrencies, known as blockchain, has the potential to revolutionize various industries such as finance and supply chain management. Furthermore, users who are interested in learning more about cryptocurrency can use various assistive technologies such as JAWS, NVDA, and VoiceOver to access online resources and read news articles related to the topic. Experts have different opinions on the future of Bitcoin and the cryptocurrency market. While some are optimistic about its potential to revolutionize the way we conduct transactions, others warn about the risks involved. However, the increasing adoption of cryptocurrency and blockchain technology suggests that they will play an important role in shaping the future of finance and other industries. The current state of crypto mining industry. According to Fred Thiel, CEO of Marathon Digital Holdings, the crypto mining industry has been hit by a perfect storm of events. Over the past year, the industry has faced a slump in the price of Bitcoin, combined with a spike in the cost of energy and an increase in mining difficulty. As a result, profit margins in the mining business have totally collapsed. And if the price of Bitcoin does not rally, firms that are only marginally profitable today will find themselves very underwater. The upcoming halving mechanism in spring 2024 will create a rush among miners to get their houses in order and ensure they are in a strong enough financial position to survive the fall in profits longer than anyone else. Miners will be looking to cut costs and eke out additional profit margin wherever they can, whether by deploying superior hardware and cooling techniques, developing software to closely monitor the performance of machines, relocating to territories with cheaper power, or renegotiating the terms of their loans. However, some miners are playing a dangerous waiting game, gambling on an increase in the price of Bitcoin that may never come. As a result, some mining companies are beginning to fold, and others are having to maneuver to avoid bankruptcy. The fatal mistake, according to Jamie Leverton, CEO of mining company Hut 8, was to imagine that 2021 was different, and that the industry was in a supercycle that was going to break prior cycles and extend the hot streak. This led to many companies taking on large amounts of debt at high interest rates to finance expansion. In response to the challenges, some mining companies are seeking to eliminate outstanding debt as rapidly as possible. For example, Bitfarms had $165 million of debt on its books, at interest rates between 16 and 18%, which made sense until the cost of debt was eclipsed by the revenue generated by mining activity. So, what's the optimal strategy for navigating the upcoming halving cycle? Mike Ho, co-founder of US Bitcoin, says it's important to be dynamic, and there is an optimal strategy depending on the price of Bitcoin. By diversifying both revenue streams and the regions in which the business operates, mining companies can minimize risks associated with the volatility of Bitcoin. Conclusion. In conclusion, the future of cryptocurrency and Bitcoin mining is complex and ever-evolving. The upcoming halving cycle is likely to present challenges for mining companies, but it also offers an opportunity to create a more sustainable and efficient industry. By cutting costs, diversifying revenue streams, and being dynamic in their strategies, mining companies can emerge from this period stronger and more resilient. What are your thoughts on the future of Bitcoin and the mining industry? Let us know in the comments below. If you enjoyed this content, don't forget to like, comment, and subscribe for more videos on technology advancements and discussions. Please do check our channel, as you might also like our other videos on related topics. Thank you for watching, and we look forward to continuing to bring you more great content from the Tech Guild channel.